crypto market has been crazy today, y'all. And on today's video, I'm going to give you two strategies of how you can move forward in a volatile market and still build out a position for your favorite cryptocurrency. Let's get started. First of all, crypto right now is back in fear. This is 24 on the Fear and Greed Index. So here it says, discover our Fear and Greed Index, a powerful tool that analyzes market sentiment to help you make informed crypto investment decisions. Stay ahead of market trends with real-time and historical data available through our easy-to-use API. So usually, like Warren Buffett says, buy fear. That's when you buy the dip. Then you have a neutral setting, a greed, and an extreme greed setting, and then also extreme fear, which we were at about a month ago. So that's a fear and greed setting right there. What we have here is called a heat map. Number one is Bitcoin down 2% today with a dominance of 58.35%. That means Bitcoin's market cap is 58% of all of crypto. So 58% of all of crypto is inside of Bitcoin. So play that accordingly. When you buying, and especially if you only got enough bread to kind of build out one position, you might want to look at the big dog to make sure that you're putting your money where most of the money is already at, which gives you less downside, more upside. Then number two, we have Ethereum with a 12% dominance, down 3% today. XRP here with a 4.4% dominance. Then we have two stable coins. We're not going to worry about that. Solana with a 2% dominance, and then BNB with a 2.4% dominance. Those are the top dogs that one should focus on. And then here's the rest of the cryptos that myself and a lot of everybody else be buying right there. You see Dogecoin's pretty big too, and Tron. But this is the rest of cryptocurrencies, all in this little box that is about the size of Ethereum. So 500 billion, let that sink in. Then we have the heat map for the stock market. Okay, so cryptos was red across the board. The stock market has a lot of green sprinkled into the red. So some of the big dogs, Apple, Amazon, AVGO, TSM, Oracle, Microsoft, they were all in the red today. But you have Nvidia, Meta, Eli Lilly, JP Morgan, Tesla, they're all in the green. So most of the market was down. I'll say about 70%, 30% was up. So the same situations in the stock market. Now let's get to these strategies. So here's the key takeaways of the first one. This one is dollar cost averaging. Most of us need to just be dollar cost averaging because you don't have to worry about time in the market or anything like that. So you got dollar cost averaging can reduce the overall impact of price volatility and lower the average cost per share. By buying regularly in up and down markets, investors buy shares at lower prices and fewer shares at higher prices. DCA aims to prevent a poorly timed lump sum investment at a potentially higher price. Novice inexperienced investors can both benefit. So we got cats out here. We know it's true. Bitcoin was at 100,000, 120,000. Well, I'm about to ape in. This thing going to 250. All the analysts saying it going to 250. So you put your money in at 100, you put your money in at 120,000. Now Bitcoin's at 85,000. Dollar cost average says put some money in at 120, it goes down. Put some at 110, it goes down. Put some at 90, it goes down. Put some at 85. But what if it goes back up? Now you're putting it at 90. You are smoothing out your prices, okay? And MicroStrategy has been doing that since 2020. So what you do and how it works. Set a fixed amount, decide how much you invest, for example, $100. Then you choose a schedule. Pick regular intervals, let's say every 2 weeks. That's usually when people get paid. Invest consistently. Buy the asset on schedule regardless of the price. Exactly the example I gave with Bitcoin. You just keep buying every 2 weeks, put your $100 in, no matter where the price is at. The key benefits: reduce market timing risk, manages the volatility, builds discipline. That's the main thing I love. And it has you more in your emotional control. The second strategy right here, this one is called the 200-day moving average. This is about your technical analysis, okay? So how it's calculated: the sum of the closing prices for the most recent 200 trading days. Divide that sum by 200. So that's almost a year, okay? It's almost a year, but You have 200 trading days. Crypto trades 365, so it's a little bit more than half the year. For stocks, you get about 225, 250 trading days or something like that, because you got holidays and weekends where there's no trading. However, the 200 moving day average, the sum of closing prices for the most recent 200 days. Each day, the oldest closing price is dropped and the newest is added, making the line move. What it signifies: long-term trend. It smooths out daily price volatility to reveal the underlying long-term direction of an asset. Support and resistance. It can act as a floor, support, where it bounces up for a ceiling, resistance, where a price falls back down. Okay. Healthy market, when the price is consistently above the 200-day moving average. So when it's above, we call that a bull market. When it's below, we call that a bear market. You can buy, let's say like Meta stock or Bitcoin or something. When it goes by that 200 or bounces off of it, that's a great place to purchase and buy, or anything below it on a great asset. It usually will go back up. Then the second one is the 200 weekly moving average. It's a very simple tool that identifies the price of, let's say, a Bitcoin or Meta is accelerating too fast or where it's at. So if price is above the 100 on the 200 moving average, if it's also above the 200 moving weekly average, it's really bullish. So if you want to look at it from the wider perspective, weekly, if prices are by the 200 weekly average, you can purchase there. And if it's by the daily 200 moving average, you can purchase there. So one time frame is larger, one is smaller. They're both important. So think about that, y'all. Now, if we're looking at all these cryptos, we have pullbacks all day for just about everything on the list. And this is about the top 30. Mostly you see red. So what I want y'all to do is go figure out which crypto is around the 200 moving day average. Identify if it's under 200 or if it's over. Also look at the weekly. Is it under or is it over the 200 weekly moving average? Find your favorite one. And if you love Bitcoin, Ethereum, or some of the top 5, if it's by the 200, this is probably a great time to DCA, dollar cost average, into your crypto, so that way you can build your bag. Let me know what y'all think about these strategies. You thinking about dollar cost averaging? You're going to be thinking about the 200-day moving average and the 200 weekly moving average. As I told y'all before, my plan next year, all year and for the next several years, is DCA into Bitcoin, get me some Ethereum, pay attention to the American-made cryptos, pay attention to the layer 1 cryptocurrencies, and focus there for the next several years. Let me know what y'all think.